So this is daytrading, and daytrading is giving $2,000, and if you make your first, I think it's $12,000, you get $10,000 paid out to 100%. It depends on the country you are at, what is very interesting. But here I am at $967 front, and I was trading yesterday and made $500 with this trade. What I want to talk about, and that is if I just show here to you the executions, you can see here how I started trading here where my mouse is, where the violet zone is starting. And then from here to here, it's just 35 minutes. 1 hour would have been here, for example, but it was just 35 minutes that I was trading. And I saw that the market was going up, and I was assuming that the market was going down. So when I'm seeing the market is going up and down, it's always about to prioritize. Do I see better right now that the market is going up, or do I see better that the market is currently going down? And in this case, it was literally that I see better that the market is going down, because I see here a lot of candles, as you see here. And when going to the very left side, you can see here that here's something that is called a gap. And when the market goes to a gap, the market will have a hard time to go there. That means, as you see here, the market is spiking through, it tries to go through, it cannot, and then it starts to fall down to go to the station. Because in trading, it's all about stations. Either we have here a gap or we have a lot of candles here. And then it's all about, does the market wants to go here up to number 1, or does it want to go down to number 2? And I assume that the market wants to go here down to number 2, to this line here. And from the trade that I took, it would have been $1,000 for this trade, adjusting $100. But the trade was only going $700 front, and I was exiting with $700 because I used something that is called a trading zone, what we will go through. So first of all, it is very important, just because the market starts here to make 4 red candles, as I'm also saying in a lot of videos, is that it is not just seeing a lot of red candles and now I'm trading down. It's about, with your experience, what do you see with the market using the 1 minute chart? Can you see that it makes more sense that the market pushes up or down? And starting here already, where I started with trading, I was already here on the computer, by the way. It was just like, but I started first here correctly trading. It was that I saw that the market was wiggling up, but I didn't want to trade the up move. I wanted to make sure that I trade the move down, because if the market starts to fall, very often with experience, it is more nicer to trade back than just trading against. Because if I would have, what I really love to trade are green candles. If I would have traded here a red and a green candle here in combination and it goes higher, I would have lost here $100, for example, the equation, and I would have not been ready for it, because the problem is the market needs to push through that gap, that hole, as you see here, because it was just like this, poof, market goes down, right? There are no candles, as you saw also on the left side. The market needs to push up very aggressively through that, what I'm not expecting the market will do. And then you can see here how the market starts here now to wiggle down very aggressively. So what I saw is that the market started here to make this 2 green candles. The second candle, I assumed that it was going red. So I entered the trade, was placing my stop up here. It just looked like this. And then I lost here $120. And then once the market made here the red candle, usually my stop placement should be up here. But because, and this is something what is very important, when using the anchored weaver and placing it on the top here, and then here on the mid rotation, you can see how it cuts here down, and at least the stop placement is around here on the top side. So I placed my stop not on the highest point of the wick. I placed it a bit lower, adjusted $100, and then it was going down. I was aiming for the middle of this consolidation phase that is here. This would have been $1,000. But instead what the market did, and this is something what is very important for me, is that I'm looking for it always if I can see specific structure. I'm going to make you an example in a drawing, and then I'm going to show you this one here. So we had here the consolidation phase. We had on the left area another point of interest. And then we saw that the market is going up. We see the market is really structuring down here now. And then now I'm assuming the market will go down here. So on the left side, we have this lows. And what is for me very important is to check at every low when the market is coming down. If the market manages to push through, so I can get here a $1,000 trade. But what the market did, it didn't went through, it was coming back up. And for those are trading areas. That means if you understood, so there are 2 things. The market likes to aim at bigger structure highs and lows, as you can see here, high and low. But the thing is, if you see that the market is pressuring up, it looks like this. This is from the bigger structure here, the low here, for example, here it looks like that. Very often from this consolidation phase, the market will not manage it to push it through at once. It will go down like this. So what I really love is to trade this move from here to here. And then once the market comes back, not to trade, and maybe from here to here inside, right? Like I want to see that once the market touches this area, I want to make sure that I can push through. And this is something what I'm going to show you here with this trade that I did. It is, if here's the red candle, and this is the low here of my first target. Second target, you can also use your second target was this low here, as you see here, because it's red and green, lowest point, red and green, lowest point. You see here how the wick is spiking through here. You can see here it was spiking through, and it could not go beyond. This was already in $700 of profit already. It was an open trade, and it was coming back, and I exited the trade at 5330, 5330, and you can see how high, by the way, I exited it. 5.330 is up, 5.330.75 is up here. So I exited the trade right away, straight off here, and you can see how I led the trade, and this is something that's very important. I was leaving the trade $250 more room to breathe. You can see here from here to here. Those are 22 ticks. Oh, it's even more. And when we take now the calculator and 20 times $12.50, it was $275 I was losing in an open trade position. And this is something what is very important in trading, is that if I can adjust here $100 to make $500, as I did here in this case, I want to make sure that I preserve so much money as possible, and it needs to push through. It would have been maybe better to take here the $700, but my goal was it clearly to trade here in the middle of this consolidation phase, because we have all three areas. We have the top side, we have the middle area, and we have the bottom side, what is here in this case the biggest structure low. And I was assuming actually it will go at least to the middle part, or like then hit out the biggest structure low, because it should look usually like that. If the first candle touches it, it should go inside. The second candle should go through, and you see how it goes through, bam. So if it reaches the middle part, very often it goes also at the bottom. And I wanted to check if the market can do that. And as you see, it just got to the top side, spikes one time here through this low here, and then it pops back up. And this is something what is very important for my trade management, is that then afterwards I see that I can adjust here again $100. But if the market is not pushing here down, I'm not expecting the market to go here down. I'm going to release myself off my trading desk because I'm finished with the trade. Because when trading, selling, you can see here, this would be a losing trade, this will be a losing trade, this will be a losing trade. When even trading up and seeing, and this is something what is very important for me, from here to there is the same range from here to there. Check this out. I'm going to use a square. I saw this even live, by the way, but I was already telling myself I'm finished for the day. And you can see here from here to there is the same move back. Green candle. I really love entering then the trade, stop placing at the green candle or even the color switch. And there is the interesting thing is, if you exactly look what the market did, check this out. If I place my stop here where my mouse is on this line, you can see a very tiny, spike, and this would have stopped me out. I would have lost money here. I would have lost $100, as you see here in the equation. I would have needed to place my stop down here. So for me, it is also a very nice sign that it's very good to stop trading, because I want to sit down on the computer for 1 or 2 hours. I want to make sure, do I see the most amount of pressure right now, and that I punch in here $100 or $200 in the equation, want to make $500 on average, and can I get more out or less out? Something what is very nice, what I want to show you is, this is one from trading students. He's already with us since 2 months now. And you can see that he had 20 trades that he placed. He saw also 25 trades. That means in 1 month, he had 45 trades. He saw 17 trades that were working, 8 trades were not working out. And then he took, very important, 20 trades, right? So we have always analyzed this trade, and we have trades that we really take. With that, I mean, we see that 17 trades worked, 8 trades didn't work. And then we took 20 trades also additional. That means from the 45 trades this trader saw within a month, he took only 20 trades, and he had 10 winning trades and 10 losing trades. Because on the practical side, it's literally about there are days and weeks where you see more working than losing trades. And then you have days and weeks where you see more losing than winning trades, as you see here. So 1 and 2. And we mostly see like sometimes working, and then we trade. And if we can see here, losing, as you see here, we don't trade. Like you see here how the trader loses your money, right? Because we call this analyze. We analyze first, we read. You can see this also. I'm also on YouTube live. This is how I trade also this combine. It was just like yesterday, it was just so hot. I didn't do it on live, but I was trading it. And what is very important is like here you can see it goes green again. The trader analyzes green, the trader analyzes green, and there are also $500 trades inside. And once you can see it goes a bit more red, you can see here already the losing trades that are falling in place. And this is something what is just very important, is that there are days and weeks where you can see more winning trades, and there are days and weeks where you can see more losing trades. And the more trades you see within 10 or 20 minutes, the better you can, of course, trade. I would like to show you something additional, by the way. This is something what a participant does. He's already now since, I think it's his third or fourth month now with us. And sometimes he needed, of course, to make also a break because he had some private things to do. But it's just like the more trades you see, that in this case, you can see here the trader, he sees that the market, he assumes the market was going up here to this line here, and it did, and then it dropped extremely strong. And now it's all about, if you see that the market is going down, how many times can you see to adjust $100 and make $500? So we see it here 1 time, 2 times, 3 times, 4 times, 5 times, here 6 times, 7 times even, right? 8 times, 9 times, 10 times, 11 times will be here, 12 times, 13 times afterwards. It's very important, like on a dead chart. But on the live chart, the trader saw it maybe here a couple of times here already, what he was drawing in. And the combination of both is just very important, that you understand, like if I have $1,000 divided into 10 trades or 20, 30, 40 trades, I always want to trade a color switch such as of green or red, lower green, red. And I want to see that if I would adjust within a green and a red here, $100, that it's $500 worth. And then how many times did I saw it? And if I see it 10 times within an hour, that it worked to adjust $100 to make $500, of course the trader is more likely to also place the trade, what you see here on the right side. So after the trader saw it here multiple times, right? You can see here somewhere in the middle, the trader saw now a color switch such as for a green and a red candle. And if you compare, it has more quality as of the other green and red candles, because here you see that the market starts to make a lot of red candles. Then it does green and red, what is so tiny when adjusting here $100, this is $500 down here until here, and it did already run over $1,000 in profit. While if we just take any green and red up here, we just see an average of 1 to 5, or just like so very big red candles when adjusting here 1 to 5, it would be that long, right? So sometimes the same length can be more money, but just having a smaller red candle, because we have here enough leverage trading the future market. And what I just want to tell you is that the more trades you see in that direction, the better trades you can place, of course, because it's always to let yourself times. There are days where the market is running down like that, and then sometimes we don't make that much money here because it's just like, oh, we see 5 times it's working right now, but it's just like suddenly out of nowhere, it's just surprisingly. But then there are other days where it's just like more obvious to trade. What I really love to trade is such as an example, what we did here, for example, also with this combine was like, I'll show you a picture. What I really love to trade is that when we see, for example, things like this one, this is something what I love to trade, for example. When we see here, for example, we have here the biggest structure high, we see the market is trending up, and then it starts to make a lot of green candles, taking here small color switch, adjusting here $100, making $500 here for this trade, and seeing it has complication, for example. And then once you can see it here, seeing 2, 3 more trades, adjusting $100, making $500, such things. And I think like it all starts, and this is something what's very important, what we do is it all starts actually here on the first picture. Can the trader see right now that the market is going up or down? In this case, the trader was assuming that the market is going up right now because you see how it goes up. And then afterwards, you see now how the market is pushing down here, as you see here. And the question is all about, were you able to see that the market is going down? If it was right or wrong, need to look forward. Like, are you able to see your 3, 4, 5, 6, 7 trade opportunities to adjust $100 and get $500 out? Was it working out in the majority of times or not currently? And if you can see something, if you see like, oh, I see the market is going up, I see I have 10, 20 trades in that direction to adjust $100 and make $500, I think it's time then to use a demo account and start trading that. Please do not use a real money account in the financial advice. Hope you could learn something out of this video. Wish you all love, good trades. JT out.